Hi, this is Darius Dale here, Senior Analyst on the Hedgeye macro team, and today I'd like to discuss how we use the CFTC Commitment of Traders report to gauge sentiment, buy-side sentiment in particular asset markets. So what is the CFTC report? What is the Commitment of Traders report? You might have heard it, you might have come across it, but what does it actually mean as it relates to how we use it in our process and our risk management overlay? So again, the CFTC report, what it is financial market participants in the future, particularly in derivatives markets, have to report their positioning to the government sort of every week, so that the government has a generalized sense of how derivatives markets are sort of trending and progressing. And so we use this data set to effectively extract the data that we need to gauge sort of buy-side sentiment in key risk asset markets. So again, this is positioning in derivatives markets, options, futures, etc. So what we show here is this is the COT report, Commitment of Traders. But there's all types of traders, right? There's the non-commercial traders, and then there's the commercial traders who are using this to hedge particular activity. Within the non-commercial report, which is what we're really trying to focus on, we have the speculators, and we have whatever other means. I don't work for the government, never will. But then on the other side of the ledger, you have producers. Got the wheat farmer in Illinois, the soybean farmer in wherever they produce soybeans here. We produce a lot of them, obviously, et cetera, the producers. And then we have the dealers, the big banks and the guys on the other side of these hedging contracts. So obviously, this guy, Farmer John here in Illinois, doesn't want the price of corn to fluctuate, by the time he has to produce and harvest it and sell it. So he'll go to a dealer, a big bank, and sort of, formulate some sort of futures contract or options contract to hedge out their price risk. But these guys, the non-commercial guys who aren't trying to hedge out price risk, who are actually just trying to take a directional view on the underlying particular asset. And again, we're talking indices, currencies, bond markets, commodity markets, basically anything that's very liquid, any sort of liquid index macro exposure. These speculators, these hedge funds, these CTAs, these types of investors, we can actually track, with it in a reasonably real time. Obviously, this data comes out at the end of every Friday after the close, with data through that particular week's Tuesday. It's a reasonably real time sort of a way to gauge investor sentiment. What we're trying to do is effectively spot not only is the market position long or short a particular security, but how long are they with respect to the recent past, and also how short are they with respect to the recent past. What we're showing here is the net non-commercial futures and options positioning. So net means obviously there's shorts and there's longs at any given time in a particular market. The net is sort of the longs minus the shorts. So if it's a positive reading, if the reading is positive, that means the market is a net long, has a net long bias. The market is prepared for the price to increase. Or if it has a negative reading, it's a net short bias, where the market participants are generally exposed to the price decreasing. So what we've seen, this is the chart of the net speculative bias in the euro. But again, I mentioned that it's not just enough to sort of identify whether or not a particular asset market is net long or net short. But to us, what's really important is how this position has changed over time to identify particular pain points of sort of factor crowding. And what I mean by that is, when you track these things on a z-score basis, and what I mean by z-score is just, how has the position changed relative to itself over a particular period of time in standard deviation terms. And so what you see here is that, at the time of this chart, this is a 1 standard deviation move here, this level. In fact, I believe this is April of 2018 when we actually made the short bias in the euro. The market was as extended from a net long position as it ever had been. This is the all-time high in net futures and net length for the euro, but it was a multiple standard deviation move, as you can sort of see relative to the chart. This was the worst possible time for the market to be net long of euros, which obviously gave us a lot of sort of confidence in making the long dollar call back in April of 2018. Well, as you see, obviously the euro declining in price over time, the dollar rallying over time, this net, a lot of that positioning has been washed out. I believe the current sort of net short bias in the euro as recently as last Friday is a minus 104,000 contracts for a minus 1.6 standard deviation move. And so again, I go back to this sort of z-score, because what you typically see is that when the z-scores get really extended, i.e., 1.5, 2, certainly 2.5 and 3 standard deviations to one direction or another, you typically see pretty big reversals in these underlying markets. So what you have, you have a lot of investors crowding, the fundamental story that got you to this point was really, really exciting. And by the the dumbest of dumb investors is probably buying this right here. And at the same time, the slowest moving and the least informed investors are probably shorting the lows here. And so what you want to do is track this on a Z-score basis to understand, when is it most likely that those investors that you want to be fading and doing the opposite of are actually sort of jumping into the kiddie pool here. So again, just sort of highlighting how, instead of using, old wall type, sort of things like surveys or idea dinners to track, investor sentiment in particular asset markets, we actually like to use a very quantitatively oriented process born out of the CFTC, COT, Commitment of Traders Report data. So again, Darius Dale here, Senior Analyst on the macro team. I hope this was very helpful.